What's up, homie? It's Tony. No, it's Max from Trades and Gains, and it looks like Wall Street just pulled off another record-breaking performance. And if you missed it, don't worry, I have you covered because let's be honest, I make these every single day. So you never miss the news if you just pay attention to the podcast. It's simple as that. I don't know how to make it any easier for you. Anyways, the S&P 500 flirted with its all-time high, closing with a 0.2% gain. Our NASDAQ baby saw a nice little 0.1% gain, in the Dow Jones Industrial, the red-headed stepchild of our ETFs and indexes, saw a 0.1% gain as well. So, what is the deal going on with all this crap? Because one day we're up, one day we're down. We had a hard close in the last 10 minutes on Tuesday. So today's rally came with a side of political drama, though. President Trump dropped a tariff bombshell, announcing reciprocal tariffs on all U.S. trading partners. The catch? They're delayed until April. That means international players now have a few months to cozy up to Uncle Sam, give him some of that sugar daddy treatment before things get heated. Because let's be honest, they don't want those problems. So we'll see how this is all going to play out. I just know we're going to end up paying for it and it's going to suck. Anyways, the translation of this, the market shrugged. Yeah, cool story, bro. We'll deal with it later. AKA, we just are going to this is like tomorrow's problem, except for when tomorrow does come and then everybody goes, oh, fuck, what did we just agree to? Anyways, stocks barely flinched because let's be real, big money loves clarity, even if it's fake clarity and hopium. Anyways, inflation isn't backing down either. The latest producer price index came in hot, showing wholesale prices aren't cooling as fast as the Fed wants. And you know what that means? Rate cuts? Yeah, those are not happening anytime soon, buddy. Wall Street is now betting on the Fed sitting on its hands for a while at this point. Bank of America even threw out the possibility of rate hikes in late 2025. Yeah, baby. Like, come on, let's get it together, people. Talk about a buzzkill for the bulls. But again, the market doesn't seem to care yet. Key word in this, yet. Now, earnings season, however, is delivering like it's Santa Claus who can't take a day off, with 70% of the S&P 500 companies beating expectations so far. Airbnb popped 15% after crushing revenue estimates. Meta just wrapped up a 19-day win streak, but finally ran out of gas today. I mean, hey, even the big dogs gotta come back inside the house every once in a while. And then Intel, it exploded 16% on rumors that a big corporate breakup could be coming. And if you know how much I kind of hate Intel, just because they have a $7 billion net operating loss that nobody seems to be talking about. That's just insane to me, for the record. $7 billion just out. And then we also had, of course, Nike teams up with Kim Kardashian to make Skims Nike athletic wear because, yeah, come on, man. Come on. But unfortunately, the Magnificent Seven had a bit of a rough start to 2025. Most of them have fallen into the bottom half of the S&P 500 performance, with Meta being the only standout. Awkward. Apple is down 2% this year, underperforming the S&P 500. It seems the tech giants are losing their shine and their appeal and their sexiness. But don't worry, they'll probably bounce back, or maybe not. Maybe Chinese tech starts taking over. Who knows? Home builders are struggling. Not that you guys care about that, but the NAB, aka Housing Market Index, dropped to 42, its lowest in 5 months. With mortgage rates and tariffs weighing on the sector, it looks like builders are going to have to get creative to stay afloat. Now, remember, a couple months ago, I told you Analysts came out and said 6% is going to be the new normal for mortgage rates. Notice, mortgage rates are stuck at 7% right now. So that 6% was what everybody was drooling over the 2% during the COVID era. Anyways, Apple's big price dilemma. If Trump follows through with his latest tariff threats, Apple's going to have to raise prices on their iPhones. And it's like, come on, man. I'm already paying $1,200. I can't afford to pay $1,400 for a phone. That's insane. That is insane. And it could hurt their earnings unless they pass those costs onto you, their loyal fans and subscribers and users of their products. So is that something you're interested in? Too bad, because we all may be Android users here very soon. And Apple, bottom line, they're still fighting those tariff battles, kid. So you know what? Get in the corner. Get those cuts sealed up. I know they're rumoring a $599 iPhone with AI capabilities. So that should probably disappoint all of us. So let's wait for that. Now, as for what we're looking at the rest of this week, Thursday, earnings from Alibaba, Walmart, and Shake Shack. And Friday, we have S&P Global Manufacturing, PMI, U.S. Services PMI, and Michigan Sentiment. In conclusion, folks, actually, we have another segment. And this is being brought to you by Investor Central Club, our options partner and screener. So be back in a moment with our new segment. And we are back, people, with a new segment where we go over the options data, big money buys, unusual buys, dark pool sentiment, and all that good stuff. So you don't have to, and you can kind of know what is going on. And if you want to, like, by the way, see this stuff, I have a link that you can use to sign up, and that would be great if you could use it. Anyways, so in big money today, let's go ahead and filter our premiums here so we can see what people were buying. SMCI this morning at 11:24, the $57 strike for the 4/17 expiration date saw 29.52 million. And mind you, shout out to Printing Tendies, who called the bottom of SMCI. And let's just say his shares that he bought are sitting pretty right now. If you want to look at that, go ahead and check out this post here. As you can see, can't read filings. And look at how beautifully, like fine wine, this aged. Anyways, shout out Tendies. Now, our winner of the day for flow was NVDA, our biggest player with 45 million in total flow. Calls outpaced puts 26.99 million to 18.64 million. And the most common contract were the February 28th 318 calls, traded 13 times. There's a strong sign of bullish bets riding in, likely on continued AI and data center demand. Tesla was another standout with 38.71 million in flow, favoring calls of 27 million versus 11 million in puts. The most constant contract were the March $360 calls, hit for 10 times. Tesla's been rebounding, and this suggests big money is still climbing upside. Now, ETF and index moves, a bearish tilt today on SPY, aka the S&P 500, 43 million total flow, but 35.85 million was in puts. The March, where am I at? 21st, 583 puts showed up 5 times in today's flow. That suggests some funds might be hedging against potential downside despite the index nearing record highs the last 2 days. Now, QQQ was more balanced, but 10.6 million in calls versus 14.13 million in puts suggests some caution in the tech sector. The most common contract, May $538 puts, possibly a play against a pullback in the near term that institutions are expecting. Now, some underdog moves we saw here were SMCI. Again, we saw 36.7 million in total flow. We saw a big golden sweep at 11:24 with 33 million in calls, and April $600 calls were traded 5 times. This $600 calls, no, that can't be right. That can't be right. Oh wait, no, it's not a big money play. It's not a big money play. $60 calls, not $600 calls, the $60 calls. That sounds a little more right. Those got hit 5 times though. Those were getting lit up like a Christmas tree, baby. But FSLR, that is a weird one because FSLR, oh man, a rare bearish name today had 9.2 million inputs and $0 in calls. I'm not even kidding. 9.6. Okay, it ended with 393.93 total, but still 9 million hedging inputs. Ugh, that's crazy. Anyways, the March 170 puts popped up, indicating a bet against solar stocks. Problems in the solar world? Those door-to-door sales ain't working out for you, Jimmy? Anyways, PLTR, split sentiment, 7.5 million flow total with more puts than calls. The most common trade was the March 118 put. Traders might be protecting against recent volatility in AI-related stocks. So what's the takeaway from all this data we just ingested? You know, what do you got to take away from this? Well, I'll tell you. Tech and AI stocks are still leading the charge, but we're seeing some hedging in broader ETFs like SPY and QQQ. Tesla and NVDA remain hot trades, and SMCI is getting some serious bullish bets. But on the flip side, some traders are bracing for a possible pullback with those SPY and QQQ put plays. So our bullish bias is NVIDIA, Tesla, and Supermicro. And our bearish signs are SPY puts, QQQ puts, and First Solar, essentially just getting decimated by put volume today. So what are you trading off of this data exactly? Let me know in the comments. Anyways, that's all I have today. These videos are probably going to be longer moving forward. Just warning y'all, because I got way more to talk about, and I want to give you more information. But if you enjoyed this, leave a like, subscribe, give me a thumbs up so you never miss a trades and gains video. And I see trades, you better be happy because I'm going to start showing my face now and showing off this beautiful mustache, and we can just like watch the growth of it together as a community, as one. So yes, I'll start showing my face more and being more involved in my videos. But anyways, hope you're all having a great night. I will see you tomorrow for Market Open. We will be streaming Milky Filky IWM tomorrow, so tune in for that masterclass because the queen is ready to cook. Anyways, see you guys in the next one. Love you all. Mwah. Losers.